Jai Jinendra. Welcome to today's session on Embrace the Changes with JCAF. The topic for the day, CSR Auditing and Accounting thereof. Today's the chairman for the session today, CA Paras Savlaji, and speaker Charmi Shah. Before starting the session proper, we'll have the chanting of the Navkar mantra, then we go ahead. Om Namo Arihantanam, Om Namo Siddhanam, Om Namo Airyanam, Om Namo Uvajayanam, Om Namo Loe Savvasagunam, Eso Panch Namo Karo, Savva Pava Panasano, Manglanam Cha Savvesi, Padmanghavai Mangalam. Jai Jinendra.
Jai Jinendra.
First, to welcome the audience, I would request our own Rajesh Sehlotji, who is himself too much into the charitable structure as well, President of JCAF Malwa chapter, to please welcome the audience, and then we'll take it ahead. All Rajesh.
Thank you, Punit bhai. Thank you so much, thank you so much, Hiral bhai, for giving me this opportunity. I'm really indebted to you and all organizers. आज का जो विषय आपने सिलेक्ट किया है, CSR Accounting and Auditing, वो बहुत ही appropriate subject.
Voice is not coming.
Rajesh ji.
अनम्यूट करिए सर।
के सेशन की जो चेयरमैनशिप कर रहे हैं, स्वागत करता आपके इन प्रयासों के लिए, आपकी सराहना करता।
I think we have some technical issues. The video is hanging.
अब आवाज आ रही है सर?
Yeah.
Sorry for interruption. सब्जेक्ट को लेकर सर मैं कुछ दो तीन इश्यूज को पॉइंट आउट करूंगा। आवाज आ रही है ना सर?
या
जी सर, CSR अकाउंटिंग एंड ऑडिटिंग जो विषय आपने लिया है, उस विषय को लेकर मैं कुछ दो तीन महत्वपूर्ण बिंदुओं पर स्पीकर्स का ध्यान आकर्षित करना चाहूंगा, और जो हमारे लर्नेड ऑडियंस हैं उनका भी ध्यान आकर्षित करना चाहूंगा कि CSR जो फंडिंग है, CSR फंड का उपयोग कहाँ होना चाहिए और कहाँ नहीं होना चाहिए, इसकी क्लियर कट लिस्ट लेड आउट है कि जो एलिजिबल प्रोजेक्ट्स हैं और जो इनएलिजिबल प्रोजेक्ट्स हैं। फॉर एग्जांपल, कंपनी अपने एम्प्लॉइज के ऊपर यदि चैरिटेबल कुछ खर्च करती है तो वो CSR एक्टिविटी नहीं कहलाती है। तो एम्प्लॉइज के ऊपर हो, एम्प्लॉइज की फैमिली के ऊपर हो, तो क्या वो CSR यूटिलाइजेशन कहलाएगा? तो ऑडिटर को वहां पर सावधान रहना होगा कि इस प्रकार की अनेक एक्टिविटीज हो सकती है CSR के नाम पर। फॉर एग्जांपल, स्पॉन्सरशिप एक्टिविटी, वो भी एलिजिबल एक्टिविटी नहीं है। तो एलिजिबल एक्टिविटीज की लिस्ट ऑडिटर को पूरे अच्छे से समझना होगी डिटेल में ऑडिट करने के पहले। इसी प्रकार से जो अनस्पेंट CSR फंड बचा रहता है, तो उसमें ऐसे प्रोविजंस हैं कि उसको अगले 3 साल तक आप कैरी फॉरवर्ड कर सकते हो। 3 साल के बाद भी यदि वो यूटिलाइज नहीं होता है तो फिर उसको जो है PM केयर फंड या रिलीफ फंड, इस प्रकार के गवर्नमेंट ऑर्गेनाइजेशन को ट्रांसफर करना पड़ता है। इसी प्रकार से मान लीजिए CSR एक्टिविटी करने के समय ड्यूरिंग द जो जनरेट हो जाता है, उसको भी उसी CSR प्रोजेक्ट के ऊपर खर्च करना अनिवार्य होता है, और यदि खर्च नहीं हुआ तो अनस्पेंट CSR अकाउंट में उसको डालना पड़ता है। इसी प्रकार से यदि आपने जितना प्रिस्क्राइब्ड परसेंटेज है CSR फंड खर्च करने का, उससे अधिक खर्च कर दिया है, तो उस अधिक को आप सेट ऑफ भी कर सकते हैं आगे चल के। ये भी हमें ध्यान रखना होगा। आजकल इम्पैक्ट असेसमेंट भी अनिवार्य कर दिया गया है कि जिन कंपनियों में 10 करोड़ के ऊपर पिछले 3 सालों में 10 करोड़ के ऊपर CSR फंडिंग का यूटिलाइजेशन हुआ है, स्पेंड हुआ है, तो ऐसी कंपनियों के जो 1 साल पहले तक 1 करोड़ रुपए तक के CSR प्रोजेक्ट जो भी हुए हैं, उसका इम्पैक्ट असेसमेंट इंडिपेंडेंट एजेंसी से कराना आवश्यक है। तो ऑडिटर को इम्पैक्ट असेसमेंट की भी स्टडी करना होगी। और साथियों, सबसे इंपॉर्टेंट बात आप जानते हैं कि CSR स्पेंड के नाम पर क्या चल रहा है देश में। तो हम जानते हैं, जैसे कि पुलिस जानती है कि भ्रष्टाचार हो रहा है पर अपराधी को पकड़ नहीं सकती, ऐसे ऑडिटर भी जानता है कि CSR स्पेंड हो रहा है, बट रियल में हो रहा है या नहीं हो रहा है वो देखना जरूरी है। तो सिर्फ जो है डॉक्यूमेंट्री प्रूफ, पेपर प्रूफ पे आपको नहीं जाना है, हमें उससे ऊपर जाना पड़ेगा। और CSR फंडिंग 80 और 12 रजिस्टर्ड संस्थाओं को दिया जा सकता है, या कंपनी की खुद की ऐसी संस्थाएं वहां दिया जा सकता है, गवर्नमेंट अथॉरिटीज को दिया जा सकता है। तो इस प्रकार से काफी अच्छा इंटरेस्टिंग सब्जेक्ट है, और मुझे पूरी उम्मीद है कि चार्मी शाह जो है इस विषय पर कॉर्पोरेट सोशल रिस्पॉन्सिबिलिटी, जिसको मैं कंपलसरी सोशल रिस्पॉन्सिबिलिटी बोलता हूं, तो इस विषय पर अच्छा प्रकाश डालेंगी, काफी नई चीजें जो है अनर्थ करेंगी, मतलब कि वो जो है उजागर करेंगी नई नई चीजें। और हमारे जो चेयरमैन हैं वो भी आज इस विषय को काफी अच्छा प्रभावित शब्दों के माध्यम से विषय को नई ऊंचाइयों पर ले जाएंगे, ऐसी मुझे उम्मीद है। पुनः सभी आयोजकों को और सभी श्रोताओं को बहुत बहुत बधाई। धन्यवाद।
धन्यवाद राजेश जी। To take things ahead, I would fail in my responsibility if I don't mention the names of certain dignitaries who are present for today's event. TC Bafna ji, our own TC Bafna ji, Amrit Porwal ji is also there online, Shantilal Kochar ji. We have Ketan Sayya ji, our Vikasa chairman, who is also online with us. Shantilal Kochar ji, our JCAF Apex president, is also here. Now, going towards our next step, thank you, Rajesh ji, for the welcome address to the audience. Taking a step ahead, when I would, before I welcome our chairman for the day, Paras Savla ji, we'll have a brief introduction. All of us know Paras Savla as a brand name. We know him. All of us would be knowing him very well. However, as my responsibility for anchoring today's session, I would like to just say a brief introduction of Paras Savla ji. Paras Bhai is a fellow member of our own ICAI and an associate member of the Institute of Chartered Accountants of England and Wales. He also holds qualification as a registered valuer, IBBI, Insolvency Resolution Professional, Business and Financial Professional, Diploma in Information Systems Audit, DISA ICAI, Certified Fraud Examiner, and a Commerce graduate. So the qualifications of Paras Bhai, we would require lots and lots more study to even be just a pinch of him. He has over 2 decades of experience. He has advised several corporate and non-corporates on domestic tax, international taxation, investment into India and out of India, structuring the transactions, valuation, conducting due diligence and planning for mergers, demergers, acquisitions, insolvency resolution, direct tax litigations, and corporate finance. He is well versed with Indian regulatory environment for investing and structure perspective. He has advised various non-profit organizations on regulatory and taxation matters. Previously, Parasbhai has also had a brief stint with one of the big four accounting firms in the area of transaction advisory services. He has been amongst of the few chartered accountants who have been regularly quoted in leading Indian and foreign newspapers. He frequently contributes to various magazines, newspapers on the topics of direct taxes, corporate laws, and valuation. He has been a speaker at various forums. Leadership wise, we would say, right from being a president of the Chamber of Tax Consultants, CTC, to our the CVO, Chartered and Cost Accountants Association. He has also been he is the vice president of the Indo-Belgian Luxembourg Chamber of Commerce and Industry and chairman of the General Committee of the Chamber of Tax Consultants. Apart from profession, he has also been there for the public cause. Considering the hardship caused to taxpayer and chartered accountants on account of changes in tax audit report and return of income tax, he was instrumental in filing writ petitions before the Bombay High Court. So it is not just being a chartered accountant per se, the taxpayer is also a part of us. As a result of these writs, Honorable Bombay High Court has obligated Government of India to issue new returns of income before the end of the financial year or immediately thereafter. With this brief introduction, I would request Parasbhai for your opening remarks for the session. Over to you, Parasbhai. Welcome for the session.
Thank you, Hiranbhai. It has been a pleasure to be with the JCF again. Thanks to Amritbhai for again inviting me. Seniors like TC Wafna and others here. The CSR, probably India is the first country in the world to have a CSR in a very formal way. As such, it is said that charity is in our blood for the Indians. And probably this is the only reason why this has been put in the so structured way by way of law. When the new Companies Act was passed, in 2013 Act was passed, the CSR was the first provision to get notified. Instead of other provisions getting notified, CSR got notified very first, and it was a pet of the previous government as well as for the current government. Various amendments are happening in the CSR provisions time and again. Either the scope is increased, the Schedule 7, the scope for the expenditure of CSR increase. Initially, if you don't do a CSR, then the criminalized provisions were there, those got modified. Every year now, the amendments are being seen on the CSR provisions. The Companies Act being the notified provision, the amendments also come by notification. Similar amendments are also seen in the charity laws, either in income tax or other provisions. So, irrespective of the finance minister, irrespective of government, this is one of the pet sections of the government to make amendments again and again. CSR earlier it was said that if you don't do CSR, no criminal things will happen, nothing is happening, you just notify in the board report that you have not spent it. But the law intention, what the government said, is not to today, and it keeps on changing, revising, updated things. There can be various reasons for such type of amendments. Maybe people didn't took it seriously because the intention of the government was so that the companies can do wonderful in the areas in which they are. Because various companies were doing CSR even in the earlier days. It is not that they are doing it post the provisions are there. But still, the CSR itself is the wonderful thing. And now since the law has been changing so fast, the various accounting and auditing issues are coming up. Whether expenditure, what I am spending is a revenue expenditure, capital expenditure, especially when the asset is getting built by way of this CSR. can company show this CSR expenditure, can show the capital asset as expenditure in the books of accounts. There are also issues that because if some capital expenditure is being done and some asset is built and that asset is yielding some income. So whether that income will be of a company or it should be of trust, these all issues which are there. And sometimes we have some answers, but sometimes we don't have answers. One of the biggest issue which was always being there, that whether the CSR expenditure is a tax deductible or not, for it's a 2% is over and above the tax. Government always said, but still there were some rulings which said that this is not a this is tax deductible, but then the law has been amended. But still there is still scope to get some deductibility if you are having ATG deduction and payment is made to the trust who is having ATG, you may claim ATG deduction, but certainly not the expenditure under section 37(1) of the company of the Income Tax Act. But some expenditure falls under the other specific provisions, you may be able to claim it. Still that is a gray area, but probability is there. Because all these things also impact in the accounting also, because this expenditure is tax deductible, whether I will show this expenditure as a deferred tax revenue, deferred tax asset, how I will create it, deferred asset or deferred tax liability. These all issues are also coming up on that also. So we need to be very careful on this type of things. And I'm sure as a role of the chairman, I can only put the posers, and the whole thing is being to be dealt by the today's speaker, Charmi Shah, on this. But I congratulate the JCF to take up this topic. This is a very important topic. People don't understand the things and how it should be tackled. And probably today's session will throw the more light on to the participants. This may help them to go further in their studies on the CSR expenditure and related activities, which will help them not only doing their job as auditors, but also many of us are associated with the various trusts. There also as a trustees, we may be able to enlighten other trustees on this, how things to be dealt with. With this, back to the organizers.
Thank you, sir. Thank you, Paras bhai, for your opening remarks. Now, for the speaker for the day, CA Charmi Shah. Welcome, Charmi. I would just, for the knowledge of the audience, give description about who Charmi Shah is. All of us very well know who Paras bhai is, but now once going through knowing Charmi, it would be a really a pleasure for all of us that we have such a speaker with us. Charmi is practicing as the proprietor of Shah Charmi and Company. She's a fellow chartered accountant from the Institute of Chartered Accountants of India. She is the managing committee member with Jain Chartered Accountant Federation, currently Mumbai chapter. A co-opted member of the CSR committee of WIRC of ICAI for 22-23. Co-opted member of Women Empowerment Committee of ICAI for 21-22. Co-opted member of the CSR committee for 2021. Co-opted member of CCB-MP committee for 19-20. Has been the committee member of the Students Committee and the Study Circle Committee of the Chamber of Tax Consultants for various years. Convener of the Students Committee of the Chamber of Tax Consultants for 21-22. Co-opted member of Women's Empowerment Committee for 2017-18. Co-opted member of the Direct Tax Committee of WIRC for 16-17. Member of the subgroup of Professional Development Committee of ICAI 16-17. She has taken lots of seminars on ICDS and various income tax subjects at different study circles of WIRC, Nasik branch of WIRC, Madurai branch of SIRC, CIRC, Vishakhapatnam branch of ICAI, and regular speaker at the Chamber of Tax Consultants. She's a regular faculty at CSR certificate course at ICAI as well. Has co-authored books of the technical guide on accounting of CSR funds by third parties published by ICAI, handbook on certification of form CSR1 publication by ICAI, handbook on audit of CSR activities publication by ICAI, technical guide on accounting for expenditure on CSR Act publication by ICAI. So this is what Charmi Shah is professionally. Now, apart from being a professional chartered accountant, her extracurricular activities include being an avid sports person who has won lots of medals and trophies in sports like badminton, table tennis, target rifle shooting, and in yoga. She is a Mumbai district level winner of table tennis in the year 2015, has won and it is a absolute privilege for all of us for to hear to what Charmi has to say. And just as a mark of our love and affection, a certificate which is to be given to Charmi Shah for the day. Welcome, Charmi. The stage is all yours. Charmi, we are not able to hear you.
Am I audible?
Yes, please.
Thank you, Hiral Bhai, for such a kind words and certificate of appreciation before I have given my session also. So this shows the faith JCF has on me. Thank you so much. So first of all, I want to give my heartfelt gratitude to Malwa President Sir for gracing the occasion, Paras Savla Sir, also the presence of Shantilal Kochar Sir, T.C. Bafna Sir, Punit Sir, and also Amrit Polwar Sir, also our Regional Council member Ketan Sayya Sir for gracing this occasion. And the first of all, I want to thank JCF for giving me this opportunity to express my views on the topic CSR and auditing and accounting aspects. So being the member of JCF, I have witnessed that the organization is doing too much good for the society, and I plead to the members who are being a part of this session to be the member of this organization to witness the wonderful journey that JCF is undertaking year by year, day in and day out. And for this fruitful outcome of the organization, all the credit goes to the office bearers who strive day in and day out for the wonderful societal cause. So for starting for the session, I'll just share my screen. Corporate social responsibility, that's CSR, which stands and it's a mode for corporate entities to give back to the society they are functioning in and for the welfare of the same. So in India, CSR was first introduced by Section 135 of the Companies Act 2013. So after that, law relating to CSR has been undergone various changes in various years starting from 2013. So the government introduced Okay. So the government introduced mandatory CSR requirement in 2013 Act, but the 2013 Act mandates companies to spend on social and environmental welfare, making India perhaps one of the very few countries in the world to have such a law and requirement. So from 1st April 2014, significant amendments have been made to CSR provisions through the issuance of various notifications, clarification, including FAQs, which are released by the MCA to streamline the implementation of CSR provisions by the companies. So in the past also, ICI has also issued guidance note on accounting for expenditure on CSR to provide guidance on accounting as well as suggesting best practices for disclosure and presentation of CSR expenses. Also, 2 years back, they have come with various technical guides on expenditure that would also help us in auditing and accounting of CSR as third party, and if the accounting is done by the company itself. So the corporate social responsibility helps build trust, raise awareness, and encourage social change. So although there are 10 of thousands of the company doing their part, and large global corporation efforts have far-reaching results that can impact major world issues for hunger and health to global warming. Here are some of the examples how major brands like Microsoft, Colgate, Apple, BMW, Sony have their social responsibility done for the betterment of the society. Here I have portray some of the the top 10 companies which are doing the best in CSR. Our first is Tata Steel, Mahindra and Mahindra, Coca-Cola, ONGC, ITC, L&T, SAIL, Tata Motors, Maruti Suzuki. This all companies have their best CSR projects, and they do for the betterment of our society. Now this is the CSR is a model. First, starting from 1930, it was an ethical model, but it was not introduced in our law, so it would become mandatory. But it was way back started, social activities were way back started by 1930, which was called as ethical model, which stood for 1930 to 1950. Then a statistic model started, which started from 1950 to 1970. Then a liberal model started, which started for 20 years, that's 70 and 90s. And then comes the last model. So the evolution of CSR in India has followed a chronological order. And for that, we have a triple bottom line approach. So what's triple line approach, we'll see in the coming slide. Now it is CSR is always a triple bottom, like people, planet, and profit. For considering what is CSR to be done for people is for betterment in the cause of natural disaster, illiteracy. We can support schools, employment, that comes on the people's side. Then health and safety, or in case of road accidents, communicable diseases, CSR activities can be undertaken. Then comes the planet. So in planet, we have to save our environment, for which we can do water and energy consumption, protection of trees, and pollution and waste management. Then comes the profit for the CSR. For CSR, the people do for the profit of their organization by supporting education, school, employment, etc. So this three models, when come together, it provides supports the organization for a social cause and for carrying the community. Then comes benefit of CSR program in a global aspects. Corporate social responsibility has benefited many large and small scale businesses in today's world. So over the past few decades, there has been much speculation about the advantages and disadvantages of CSR. So there are several advantages to implementing various forms of CSR and sustainability programs in large and small businesses. So corporate social responsibility have become a need for success in business world today. So there are several ways in which an organization can benefit from well-designed CSR program, whereby CSR does not need to be viewed as a drain on internal resources, but rather as a strategy to enhance operational excellence. Here, a good CSR practice can not only bring in greater benefit by fostering, the first is attracting and retaining employees. The second benefit would be enriching the corporate reputation. It creates a positive image and branding between creating to the place the company as a responsible corporate citizen in the world market. It also helps the company to have cost saving in various measures. It can also shorten the supply chain by cost effectiveness. Then also it creates a brand value in the eyes of the customer, also brand value against their competitor in the same market. Then CSR can also avoid negative press and customer boycotts, which is risk reduction or risk management. The corporate social responsibility was first time introduced as a statutory obligation for companies by the way of Companies Act 2013 by section 135. So thereafter the company corporate social responsibility policy rules were notified on 27th Feb 2014, which were called as CSR policy rules 2014. Then it had laid the specification and procedure to be followed by the company while discharging the CSR obligation. Now, the Companies Amendment Act of 2019 and 20 resulted in some major changes in CSR provision under section 135 of the Companies Act. So on 27th Feb 2014, there was a notification amending Schedule 7 also, and that was effective from 1st April 2014. Then on 28th Feb, notification implementing section 135 and Schedule 7 was given effect of. And then on 31st March 2014, corrigendum explaining an entry of section 7 was passed. So slowly and steadily, the Companies Act was making the CSR very clear and clearing every ambiguity that was there from the start, that is from 2013. Then on 18th June 2014, circular number 21 of 2014, which was issued on Schedule 7, and they had notified various certain activities in it. And then on 6th August 2014, insertion of a new activity for CSR was done in Schedule 7. So then the Companies Act of 2019 and 2020 resulted various changes in CSR provision under section 135 of the Companies Act. So to provide for notified changes, the Ministry of Corporate Affairs had released the draft company, that is Corporate Social Responsibility Policy Amendment Rules, in March 2020, which were called the draft rules. They invited public comments, and recently on 22nd January 2021, the MCA finally issued the companies, that is called the Corporate Social Responsibility Policy Amendment Rules, that are called the new rules, giving effect to the changes introduced in CSR by the Companies Amendment Act of 2019 and 2020. So the provision which came into effect from 22nd January 2021 shall not affect any CSR projects or program approved prior to first day of April 2021. So this rules have notified that the various activities will be applicable from 1st April 2021 and certain activities will be made effective right from 22nd January 2021. So let us first start with specific provisions of Companies Act, which is for applicable of CSR provision in India. That is section 135. What does it say? That CSR is mandatory for every company meeting one or more criteria during the immediate preceding financial year, and they have given 3 criteria. If any one is also met, then the company gets covered under CSR provision. So 2013 Act mandates that every company, including its holding or subsidiary, as well as a foreign company with the project office or branch in India, has to undertake CSR activity if they met certain thresholds. So what's the first criteria? The first criteria is net worth of the company should be 500 crore or more. So how net worth is decided? It is according to section 257 of the Companies Act, so which gives definition of net worth and do not include reserves, depreciation reserve, buyback, revaluation reserve, or amalgamation. Then comes the second criteria. The second criteria is annual turnover, which is 1000 crore or more, which is again defined under section 291 of the Companies Act. So turnover is defined where gross amount of sales, supply and services as recognized in our profit and loss in the financial year is considered as turnover. So in case there is a loss-making company, but the company satisfies any of the other criteria, then also it is said that section 135(1) is satisfied and the company has to follow or do its CSR provision, CSR activity, or make CSR committee whatsoever, which comes under the purview of section 135(1). Then the third criteria is net profit of 5 crore or more, which is defined under section 21F of the Companies Act, and also profit plays a very important role while deciding whether this profit comes under section 135(1) or not. The next step is if the company comes under the purview of section 135(1), it has to make a CSR committee. The only relaxation is if the criteria of it says that 2% of the average net profit has to be spent on CSR activity. So if 2% of the average net profit or the amount to be spent on CSR comes to less than 50 lakh rupees, then there is a relaxation that the company need not make a CSR committee. But sorry, but if it has to make a CSR committee, the answer is every eligible company which comes under 135(1), which we have already discussed, and supports the 3 criteria, has to make a CSR committee. So now what should be the composition of the CSR committee? One second. Sorry. Now how can a CSR committee be formed? It's it has to be a composition of CSR committee with a minimum of 3 or more directors, and amongst the 3 directors, at least 1 director must be an independent director. Now, in case where a company which is not required to appoint an independent director under section 149(4) of the 13 Companies Act, should have 2 or more directors in its CSR committee. Then An unlisted public company or a private company shall have its CSR committee without any independent director, and if an independent director is not required as per CSR Rule 5.1. Now, in case of a foreign company which is operating in India and they also fall and are eligible under CSR, so in that case, they have to formulate CSR committee. So in such case, the CSR committee shall comprise of at least 2% of which any sorry, I have very bad throat, so
Relax, Charmi. Just take some
Yeah,
water.
Yeah, it's okay.
sorry for the interruption.
Let
I'll
us, let
continue.
us relax. Hiral, if you can take up for 10,
Sorry,
10 or 15 seconds.
Continue.
No.
A private company with only 2 directors in its board of directors would constitute its CSR committee with those of 2 directors. And now let's come to the role of CSR committee. The role of CSR committee is like the CSR committee shall formulate and recommend a CSR policy to the board. CSR policy shall point out its activity to be undertaken by the company as enumerated in Schedule 7. And CSR committee shall recommend the amount of the expenditure to be incurred on the CSR activities to be undertaken by the company. And CSR committee shall monitor the CSR policy of the committee of the company from time to time. And also, the CSR committee shall establish the transparent controlling mechanism for the implementation of CSR project or program or activities which has to be undertaken by the company.
Charmi, you can relax for a few seconds. It's okay.
No, actually, I took a break for taking a medication, so I don't want to waste our time. We
Okay.
already have too much to cover and we do not have time right now.
No problem. No problem.
So thank you so much. Now CSR policy. So what are the CSR policy to be undertaken? The CSR policy is defined in the CSR rules under section 135 of the chapter 9 of the Companies Act, which includes namely a list of CSR projects or programs which a company plans to undertake falling within the purview of Schedule 7 of the Act, specifying the modalities of the execution of such project or program and implementation schedule for the same. Then what are the monitoring process of such projects or program? Just giving money for CSR is not enough. There should be an effective monitoring process for the same. And the policy should also specify that the CSR activities does not include the activities which are undertaken in pursuance of the normal course of business of the company. And also it further provides that the board of companies should ensure that the activity included by a company in its CSR policy are relating to activities included in Schedule 7 of the Act. Also, the CSR policy of the company shall specify that the surplus arising out of the CSR projects, if any, during any of the project or program or activity, shall not form part of any business profit of the company. Now, CSR, what should be the CSR policy framing and disclosure? CSR committee has to recommend the board, and the board has to approve the policy. Then it has to disclose the content of CSR policy in its board report. In the board report, they have to give a specific hyperlink in which the hyperlink take the audience or the readers of the board report to directly to the page where they have specified the policy. And this is very important and mandatory for each and every board report to specify about its CSR policy. Then also to disclose contents of CSR policy in the board's report, and that should be displayed on the company's website. So if any company CSR policy is listed on its website, so one can get knowledge of the policy from the company's website itself. So no need to fumble anywhere. On the website, on the board's report, we can get the policy of the CSR activity. This we have already undertaken, that 2% of the average net profit during the 3 immediate preceding financial year, or where the company has not completed the period of 3 financial years since its incorporation, such immediate preceding financial year should be the quantum of CSRs to be spent by the company, which comes under the purview of section 135. So first, reading this, we should understand the intricacy of the average net profit, the word average net profit. So if in case any company has loss in any 2 preceding financial year, then the average has to be taken of the 2 preceding financial year, and still the CSR has to be spent by the company. Now, what's the meaning of average net profit? This is very important in case of calculation of net profit to compute what should be the 2% of the CSR spend. So the calculation of average net profit should be undertaken very properly. So it is the average of the net profit of the company during the 3 immediate preceding financial year. And as per the company's CSR policy rules 2014, CSR rules, net profit means net profit of the company as per its financial statement prepared in accordance with its applicable provision of 2013 Act, but would not include any profit arising from any overseas branches or branches of the company, whether operated as a separate company or otherwise. And it would also not include any dividend received from other companies in India which are covered under and complying under section 135 of the 13 Act. So accordingly, if we say that a company has to contribute for CSR for section for 21-22, it has to take net profit of immediate 3 preceding financial year, that is starting from 18-19, 19-20, 20-21. So for financial year 2021, we get 3 preceding financial year. And also section section 138 from the Companies 13 Act, which specifies addition and deletions to be made while calculating the net profit of the company. So mainly it excludes capital payment, capital receipts, income tax, set off of past losses. Additionally, the computation of net profit of CSR spend calculation would be based on profit before tax. So while calculating, we have to start with profit after tax, coming to profit before tax, after deletion, inclusion, and exclusion of various activities which are specified under section 198 and also taking under reference of section 197 of the Companies 13 Act. So net profit should not include such amounts which are prescribed, and if computation of net profit for section 135 is as per 198 of the Companies Act, which is primarily net profit before tax. So additional adjustment which has to be made while calculating net profit, if we start our calculation as Companies Amendment Act 2017, then we have to take while considering the profit after tax to profit before tax, we have to exclude any amount representing unrealized gain, notional gains, or revaluation of assets. Then also any amount representing profit by the way of premium on shares or debentures of the company which are issued or sold by an investment company should not be excluded from net profit as per Companies Act 2017. So the CSR rules provide that the net profit in respect of a financial year for which the relevant financial statements were prepared is in accordance with the provision of 1956 Act would not be required to recalculate in accordance to 13 Act. So also in case of a company, foreign company, net profit would mean net profit of such company as per statement of profit and loss prepared in terms of section 381(1)(a) read with section 198 of the Companies 13 Act. So if in case the company failed to spend its CSR fund, first it has to disclose it in the board's report with reason for why it was not spent. Secondly, there is a penalty provision which are specified and in the amended rule which have come on 22nd January 2021. There is a variety of penalties which are executed, should be executed, and that we will understand in the next coming slide. Secondly, if in case the company fails to spend at the end of the year, there would be unspent amount. So what would be the treatment is also be written in the Amendment Act. So before the Amendment Act, the unspent amount had no place. There was no specification. There was ambiguity. If the it was just that the board has to specify it in the board's report. But now, after the Amendment Act, there is a specific provisions, that is section 135(5) and 135(6) has been amended to provide that how the unspent amount has to be done. And also how the excess amount has to be spent is being specified right now, because before the Amendment Act, the excess amount if spent by any of the company would go in vain in the next coming year. But this Amendment Act has shown that if a company gives any excess amount in a particular financial year, then that would be carried forward for and given set off for next 3 succeeding financial year. And this is a very welcome change and has helped each and every company who does excess of CSR spend. Now, if the company has to spend mandatory CSR, but in case they have not spent, then unspent amount relating to an ongoing project. So after the Amendment Act, there is a definition of ongoing project as well as not ongoing project. Not ongoing projects are the project which start and get accomplished in a span of an year, that is 12 months. And ongoing project has been defined for giving multi-year projects, and it can go up to 3 years. That is the year it comes for 4 year maximum. It starts from year 1 plus 3 years they can continue that ongoing projects. So for the maximum 1 plus 3 years, they have defined as ongoing projects. So in case the company has done an ongoing project and there is an unspent amount relating to any ongoing project, has to be transferred to unspent CSR account within and used within immediate succeeding 3 financial year in pursuance to CSR policy. And this unspent CSR account has to be specifically made in any in a bank within, and the amount has to be transferred within 30 days from the end of the financial year. Now, amount transferred to unspent CSR account remaining unspent at the end of immediate succeeding 3 financial year has to be transferred into government fund, which is notified under Schedule 7. And now unspent amount not relating to ongoing projects has to be transferred to government fund, which are notified under Schedule 7 within 6 months from the end of the financial year. So the company has to be very specific whether the project is ongoing or not ongoing. At the end of the year, they have to decide whether this is not ongoing project and the amount is unspent, then it has to be transferred to the government fund within 6 months. And if it is not on, this is ongoing project, then at the end of the financial year, they have to transfer it to the bank account within 30 days of the end of the financial year, which can be used for 3 succeeding financial year. But at the end of 3 financial year also, if there is an unspent amount in the bank account still remaining, then it has to be transferred to the government fund, which is given in the Schedule 7. Now the board has to also monitor and implement of ongoing project and shall be very competent to make modification. So this the ongoing projects were first not monitored. They were ongoing for years and years, and there was no monitoring of the board of directors on the project. So the amendment has made now compulsory that each and every year the ongoing project are being monitored, and if necessary and if it is not creating an impact to the society, then it has to be modified as and when required. And on board's approval, excess CSR spending are now allowed to be carried forward for succeeding 3 financial year, and it can be set off for the next 3 financial year. Now, CSR expenditure board report has to include an annual report on CSR, contribution to corpus for the project to form a part of CSR, and all items must fall within the purview of Schedule 7. These are the CSR expenditures notified under Schedule 7 on 27th Feb 2014. First is eradicating hunger and poverty. Second is promoting education, promoting gender equality, ensuring environmental sustainability. Contribution to PM National Relief Fund, protection of national heritage, measures for benefiting of armed force veterans, training of promoting rural sports, rural development projects, and slum development projects. So now the companies should first give preference to the local areas and the areas around it where it operates for spending the amount of earmarked for CSR activity. So the MCA has also clarified that the CSR activities enumerated in Schedule 7 to the 2013 Act are broad-based and are intended to cover a wide range of activities. So thus, this prescribed activities should be interpreted liberally and to capture the essence of CSR. Now, after the Amendment Act, which has come on 22nd January 2021, they have given a definition to CSR, and which is excluding certain items which fall, if the activities fall under this exclusion, it will not be considered as CSR activities. So, it is defined under section 2D to refer the activities undertaken by the company in pursuance of its CSR obligation. And the amended rule further identifies the activities which do not qualify towards CSR requirement of the company. So, which are the activities which are excluded from the list of CSR activity? First is activity undertaken in pursuance of normal course of business. So, however, a company so the question arises whether the employees can be migrated to their hometown, and that amount can be counted as CSR for the company. During the COVID, this was a alarming question that had come up. So many circulars and notifications have come out which clarified that migration of other employees, means employees of other companies, can be claimed as CSR, but migration of their own employees cannot be considered as CSR activities. So normal course may include sales, supply of goods and services, so not being part of CSR, but mere absence of profit motive will not take an activity out of the normal course of business. So here, in the view of COVID pandemic, an exception to this was created by the MCA notification dated 24th August 2020, allowing companies engaged in research and development activities of new vaccine, drugs and medical devices in their normal course of business to undertake such research and development in relation to COVID-19 as CSR obligation. But this was only for 3 financial year from 2020 to 2023, that is 2021, 21 to 22, 22 to 23. So this exception has been duly incorporated in new rules subject to certain conditions, and which were that conditions? First was that research and development activities shall be carried out in collaboration with any of the institution or organization mentioned in item 9 of Schedule 7 of the Act, including public funded university, IITs, Indian Council Medical Research, etc. And details of such activities has to be disclosed separately in the annual report on CSR, including in the board's report. Second comes any activity undertaken outside India shall not be considered as CSR except for training of Indian sports personnel representing any state or union territory at national level or India at international level. So first it was activities outside India not included, but now there is a little change and they have given a certain exception to our sports personalities. Third point comes as contribution of any amount directly or indirectly to any political party under section 182 of the Companies Act shall not qualify as CSR activity. So there is no change. Before the amendment also this point was as it is, and after the amendment also the point is as there is no change in that. The next point is activities benefiting employees of the company as defined in section 2K of the Code of Wages Act of 2019. Here, two key points are changing here is activity benefiting employees of the company is employees under Code of Wages Act. So this is very significant change, and the meaning connotation of word employee that is now connected with Code of Wages Act. So for our understanding, the employees or people which are hired for a reward are only taken or considered. So moreover, the regulation itself gives definition for contractual employees. Also, that extends the definition should not include contractual employees. So coming on to the second point of employees benefit part is initially it was talked about benefiting employees and community. Then it was okay. But the draft rule came in March 2020 and also indicated significant benefit that talked about 25% of the benefit. But now the amendment which have come in is very specific and have taken away the word significant or the 25% of the benefit part. So to that extent, any benefit that goes to employees or any project which goes to employees which actually gets disallowed. And coming on to the family part of the employees, the initial draft 2020 spoke about family and its benefit. But the current situation, the word family is taken away, which so the interpretation can be that if it is not benefiting employees but benefiting family of the employees, still it can be considered as CSR activity. So now, does it mean that the employees cannot be a beneficiary of CSR projects if the activity is done at society at large? For example, we take an example that company made hospital beds for the society at large, but in those beds there was no special reservation for the employees of the company. But in case they use it normally as the employees use it normally as others in the society, that does not mean that the amount spent on the company is spending its CSR amount on its employee, but it as an organ of the society, they cannot be excluded and that activity would be considered as CSR spend. Next comes activity supported by the companies on sponsorship basis for deriving marketing benefits for its product or services. So here it is a very gray area. The agreement has to be checked whether the company is not taking any benefit from the sponsorship or not. If it is not taking any benefit, then the sponsorship is allowed. And if it is taking benefit, then such sponsorship activities are not considered as CSR activities. And the last, activities carried out for the fulfillment of any other statutory obligation under any law and force in India. These are the SDGs map under the schedule. This is 2018 data. So the percentage would be on 2018. This is the report of High Level Commission HLC on CSR in 2018. So the percentages of 2018, it was 8.72% of the total CSR spend was on the environment thing, and the environment gives clean water, affordable clean energy, sustainable cities, climate action, life on land. And 36.95% of the total CSR spend was on education and differently able person. Then 28.44% was on health, eradicating hunger, poverty, and malnutrition, sanitation, and also only 1.15% of the total CSR was for encouraging sports. Then comes 1.58% of the total CSR spend was on heritage, art, and culture, which comes industry, innovation, and infrastructure also. And 2.58% was on gender equality, women empowerment, old age homes, reducing inequality. In the same way, 10.43% was on rural development and 0.38% was on slum area development. This was only giving a view for in which area does our companies in India is spending their CSR activities. So coming on to CSR projects and implementing aspects, how the project should be implemented. First, one thing is that the company can directly contribute to the CSR expenditure, and other mechanism can be that it can be contributed through Section 8 company or a registered trust or a registered society. So the FAQs issued by the MCA had clarified that the CSR provision of 13 Act apply to every company and no specific exemption is given to Section 8 companies. So hence, Section 8 companies are required to follow CSR provisions. Then it should be established by central government or state government or an entity established in the Act of Parliament or state, and any of the activities has to have a track record of 3 years for the same activities which has to be undertaken. Modalities and utilization of the fund, project, and monitoring and reporting mechanism has to be specified for the company. Coming on to the penalty part, penalty cause in case of company fails to spend is disclose if the company fails to disclose any unspent amount in annual report of the CSR or transfer any unspent amount into funds specified in Schedule 7 within specified period, that is 30 days or within 6 months, whichever case it may be, or transfer any unspent amount relating to ongoing project into unspent CSR account within specified period, then the company indulged shall be liable to a penalty of lower of the following amount. First is twice the amount required to be transferred by the company to the fund specified under Schedule 7 and 1 crore rupees, whichever is lower. And every officer of the company in default shall be liable to a penalty of a lower of the following amount. First is 1/10 of the company required to transfer by the company to such fund specified in the Schedule 7 or unspent corporate social responsibility account, or 2 lakh rupees, whichever is lower. This penalty has come into effect after the Amendment Act. Now coming on to the accounting part, as Section 135(1) says that it should be 2% of the average net profit. So where the CSR expenditure has to be shown in our financial statements it all depends upon how the CSR expenditure is spent. So first, if the CSR expenditure is spent by the company on its own, or it has given its amount to any implementing agency, or it is done only it has just only contributed to the fund, or through it is done through registered entity, in every case it has to charge an expense to the statement of profit and loss account, and unspent amount should be as per section 135 and 136 of the Amendment Act. As we know that the unspent account, account 135 and 136 should be transferred to the bank account within 30 days or transfer to Schedule 7 within 6 months from the end of the financial year. So now the accounting part, if we say that the accounting should be done very specific, very specifically for the all the CSR spend. If implementing agency, you are an implementing agency and you are doing accounting, or you are a company and you are doing accounting, it all depends on what entity you are accounting for. For example, if an entity is taking projects or program from 2-3 companies, then the amount should be specific and the accounting should be done project wise or program wise. That would give a clarity on the phase of financial accounting. So now coming on to the responsibility of auditors, or why is audit very compulsory? Requirement of audit of CSR activities seems not to be mandatory as per Companies Act 2013. But however, various provisions of companies rules, that is 2014, require monitoring and reporting mechanism for CSR activities. So there were certain amendments in the rules, like Rule 4, 5, and 6 of CSR Rules 2014 were amendment, and they provided that certain monitoring mechanism, reporting mechanism has to be introduced. Also, they had said that these rules were amended to bring out that there should be an established track record of 3 years for the implementing agency to undertake any program. So now, as I said, that accounting should also be considered while taking accounting you are doing in the books of company, or you are doing accounting in the books of the implementing agency. On the same fashion, the auditors has to check whether you are auditing an implementing agency books of accounts or the company's books of accounts. So firstly, the bifurcation will be wherever a company undertakes CSR activity by itself. So when a company undertakes CSR activity by itself, the auditor of the company should ensure that the activity or the project undertaken within the purview of Schedule 7 of the Act. Then if mere contribution or donations are given, then the same has to be specifically allowed as per Schedule 7 of the Act. Also, separate disclosure of the expenditure of CSR activity has to be made in Schedule 3 of the Act, and the expenditure of the project has to be incurred as per Companies Rule 2014. So the company, the auditor should check whether the company has complied with the applicable accounting standards in accounting, recognition, and disclosure relating to CSR spend. And it also has to compile and check whether the standards of auditing and accounting and auditing of CSR spend includes SA 250, which says the consideration of law of regulation in audit of financial statement has been seen, as well as SA 720, which we have to consider as a revised 720. The auditor's responsibility relating to other information has to also seen by the auditor. In the second case, the responsibility of auditors in case the in practice of the third party before issuing any independence practitioner report on utilization of CSR funds. Firstly, the third party The auditor should ensure that the third party has spent the fund on CSR activity as per section 135 of the Companies Act, which has to be read with Schedule 7 of the Act and relating regulation. Second, the auditor has to verify the CSR spend has been done as per guidance note of audit of expenses issued by the ICAI. And also the auditor has to check whether the utilization of CSR spend, CSR fund reports is issued in accordance with the guidance note on reports or certificate for special purpose issued by the Institute of Chartered Accountants of India. Also, the auditor of the third party has to issue a utilization certificate. Utilization certificate, the format of which is already given by the Institute of Chartered Accountants of India, which specifies that each and every transaction, like for example, the expenses is made for administration expenses or specifically they have to give the format of which is shared by the institute. So in the same manner, we have to give the utilization certificate. But the utilization certificate, the format of which was not done beforehand, and that had created various ambiguity because the CA or chartered accountant who used to combine all the information received from various implementing agency had various problems faced. As the format of which was not specified. So after specified draft which is given by the institute, it has given a very relief to the person who was combining all the utilization certificate of from received from various implementing agency. Certificate union has to be issued for each and every utilization certificate which we issue, and which is mandatory for grant utilization certificate. And also ICAI has listed several certificates for which union has to be mandate. First is certificate for fund grant utilization for charitable trust, fund grant utilization for NGOs, certificate of fund grant utilization for statutory authority, and certificate for fund grant utilization under FEMA, FCRA or any other rules. This amendment has also made the clarity or reduce the ambiguity about various things like administration overheads or capital assets, etc. So capital asset, they have said that now from 22nd January, CSR company can issue their amount for the benefit and for recognition or purchase or creation of any capital asset. But the issue was that the capital asset should be shown in the balance sheet of the company or the implementing agency who really owns the capital asset. So if the capital asset belongs to implementing agency and it is shown in the books of the company, then the Amendment Act have said that the capital asset should be transferred to the implementing agency from the books of company within 180 days from 22nd January 2021. And they have also given extension of 90 days. So within 180 plus 90 days, the company should transfer any capital asset which is capitalized in their own books to the implementing agency if the ownership lies with the implementing agency. So this is also a very welcome change because first initially CSR expenditure was only revenue in nature, and now it has also gained from capital in nature. So So CSR activities has to be disclosed in various statements like financial statement, cash flow statements, board of directors report, notes to accounts, and also filing of CSR form 1, which is very much important for registration and re-registration of each and every charitable institution which are registered under ETG and 12AA. So presentation and disclosure, like unless CSR reporting practices were standardized, it was not possible to provide stakeholders with confidence that the underlying CSR disclosure are both reliable and comparable. So this CSR reporting standards which are issued, now it gives a very standardized format. The annexure, how the board of directors report has to be shown, is very standardized, and also there should be an annexure to the boards of director report giving the annual report on CSR. So the board of director report of the company shall mandatorily disclose the composition of CSR committee, CSR policy, project approved by the board on their website, if any, for public access, the policy developed and implemented by the company on CSR initiatives, along with the annual report on CSR undertaken by the company. So the company is required to display their report on the company's website, if any. And a foreign company should also contain an annexure regarding the report on CSR in its balance sheet, which should be filed in the section 181(1)(b) of the 2013 Act. So the making the company disclose their CSR activities and contribution to the society is very important to help the public make informed decisions. The investors these days are becoming very socially aware and wants to engage with the companies that take positive steps for the development of the society. So the concept of CSR was based on the principle of comply or explain. So now that was shifted to comply or pay penalty. So it may also happen that the company is incurring losses, but it may still satisfy the conditions specified under section 135 of the Act and become liable to comply with the provisions of the company's rule. But since there are profits, the company may not spend the amount of CSR, but they have to give a specific reason for not spending the amount. In case it does not disclose the reason for not spending, then the company shall have punishable with fine. So what will be the disclosure required in notes to accounts for CSR? So they would require the gross amount, which the amount should be spent during the year. Second would be disclosure to be made by the in the notes to cash flow statement wherever it is applicable. Then details of relating party transaction, that is contribution to trust controlled by the company in relation to CSR expenditure as per accounting standard 18 relating party disclosures. So a note also should be also gives clarification that situation in which a liability for CSR activity is to be recognized and its timing for its recognition, explaining also that rarely a company would recognize a CSR asset. So it will be generally very difficult to demonstrate control over the asset, but it should be very much shown, and the capital asset should be shown in the financial statement as CSR activities. So the detailed disclosure has to be shown. Also, it should be mentioned as a note to cash flow statement and would need to provide details of relating party transactions, such as the contribution to a trust controlled by the company in relation to CSR, etc. And Now, CSR Form 1 is compulsory for each and every implementing agency. It re-registers themselves. After filing CSR form electronically, it has been divided into two parts. First part is the information of the company, whether the company is a trust, registered company, or controlled by any state governments, and SIN of the director, DIN of the director, each and every specific details they are asking in the part 1. And the second part is the um, clarification by the practicing chartered accountant, cost accountant, and then the form is filed. After the form is filed, you get an re-registration number, and which is very much important because now in the disclosure part, in the boards of director report, they want the registration number of each and every implementing agency. So if the company is taking any implementing agency for their projects which do not have their number, CSR registration number, then that would not be eligible to do the project or program of the company. So re-registration for each and every NGOs or implementing agency have now been compulsory after the CSR Form 1. So that's all from my side in presenting my presentation. I have been seeing certain queries in the chat box. If I would like, the first query is, should trust have CSR registration for receiving CSR donation? Yes, every trust who requires to have CSR donation should now have CSR registration after the CSR Form 1. Okay, that's all from the query side.
Thank you, Charmi. It seems that people have understood it so well that we don't have much queries. I would request now for the remarks from the chairman of the session, Paras.
Charmi has taken the session very well. She has covered the most of the things. But as a closing remark, I would say that the CSR activity is one of the good professional area which has been coming up. Because as a chartered accountant, the auditing thing which is there is the most important thing, because the government thirst is that the whatever money you have spent on the CSR, whether that has been really gone to the people for whom this money has been spent. Hence, these various forms has been introduced, and then the law has been modified, keeping that in the mind for last 2 to 3 years. So, role of chartered accountant is very important here to see that the money has been really spent for the objects for which it has been there. In the years to come, there is also one more professional opportunity which may come up, the social stock exchange, which is being set up in the days to come. And there the social standards are there. There also these standards will help the auditor to work on these points, because the standards, because currently the whatever spent has been done, but we are not able to measure the spent, whether this has been, how fruitful this has been to the beneficiaries. So that for that the standards which are in the process with the ICAI jointly with the SEBI, these standards will help us, the chartered accountants, to measure the benefit what the beneficiaries has got, and this is going to be a good area for practice, which all should be geared up to work on this. It's not a plain vanilla audit, but something more than the audit. That's all from my side.
Thank you, Paras bhai. In case we have any queries, no, I don't. First and foremost, I would like to thank Paras bhai for accepting our invitation and chairing the session. You have always been there. It is just the brand name which matters. Along with JCAF, the branding of Paras bhai, people are there. The session would be really worth listening to. And the speaker for the day, the smiling Charmi Shah. She has really taken, thank you Charmi for taking the session through, even though for the information of the audience, she's suffering from fever. Still, she has taken the entire session very well without much interruption as such. Thank you so much for sailing through, and for people like me who do not know much about CSR. For us, CSR is just the full form, corporate social responsibility. That's it. We didn't know much about it, but you have explained the entire gamut. And as Paras bhai pointed out, it is a good field of practice to come, a good area, good avenue of practice as well. So I would thank both of you all for the session and JCF for holding it. Our next session would be on Monday. It would be about the Black Money Act. It would be headed by none other than our own Shardul Shah. And the chairman of the session also would be amongst us. Just a second.
CA Rajesh Sanghvi.
Just a second. We would be having CA Rajesh Bhai Sanghvi as the chairman, speaker as Shardul Bhai. The topic would be recent updates and changes in black money laws, the country. Again, a different topic, a topic which each one of us would not be knowing much about, but it would be worth learning. Thank you, everybody, for attending the session. We'll close for the day. Thank you.
Thank you. Thank you.
Yes, sir. Yes, Puneet bhai. Puneet bhai, you're on mute.
Sorry. One small announcement regarding the 28th of May program that we are having. So I would request all of you who may know, who have our children or parents or themselves, to please participate in the program called JCAF Got Talent. Now, 28th of May, we are celebrating it as a foundation day. I'm sure flyer you all must have seen. So once you go through that flyer, you would realize that this is a program for enabling the networking amongst all our members and more fellowship. Okay, so 28th of May, we are celebrating it at KC College, and would recommend that those of you who can contribute or showcase their talent, not only the professional talents that we all showcase on our platforms at sometimes, but those special talents maybe sometimes in music, in singing, or maybe anything, a skit or a drama. So whatever it could be, please put in your entries. And we would there would be a panel of judges who would select those entries, and after the selection, those would be requested to be part of that particular day celebration, and it would be held at KC College auditorium. So I think this would be a wonderful program with more than around 500-600 attendance, and it would be a wonderful platform. So would recommend all of you to please participate in this particular initiative of JCF. GCAF got talent.
Thank you, Punit bhai, for the
Yes.
anything from the horse's mouth. Amrit ji.
Yeah, all good. Actually, it was a pleasure to have Paras bhai with us at a very short notice, and of course, Rajesh bhai Salo to set the stage for today's deliberation on CSR. Absolutely, both of them are very learned in this field, and Charmi has made the entire this thing presentation in such an impressive way that even layman who is not even earlier aware of the intricacies of this CSR gamut have been immensely benefited. Absolutely. Keep it up, Charmi.
Thank
for,
you, sir. Thank you,
being
sir.
here
Thank you,
despite
Charmi. Yeah, very
Thanks a
good.
lot. Thank you to the audience also. Please keep spreading the word about all JCF activities. Thank you.
Thank you.
Meet up on Monday.
Thank you. Thank you for bearing with my khasi.
No, it's okay.
Bye, everyone.
Okay.
Yeah, goodbye, Pras bhai. Yeah, thank
Okay.
you.
Palak will close.